We have just seen the worst May in over 2 decades in terms of GTA sales. Furthermore, we have also seen more than 66% of GTA realtors not having one transaction in the first quarter of 2025. Today, we're going to talk about the similarities to the 1989 to 1996 recession and boom and the impact on the housing market, and compare that to the 2020s crash. We're going to talk about what you should do right now in terms of buying and selling, and we're going to talk about the similarities and how they affected the difference in the market. Hi there, my name is Marcy Verberg. I work here in Toronto as a realtor and an investor. Okay, here we go. We're going to talk about the late 80s and early 90s first. So, what happened in the late 80s? Okay, so you saw a very gradual decline in sales volume. We started off, kind of in the mid 80s and late 80s with very high sales. And as you can see from the charts, the sales actually declined very gradually. So, we had 49,000 sales in 1988, 38 in 1990, and 27,000 in 1996. What you also saw at the same time was prices dropping all the way from 273,000 down to 168,000 for the average price in the Toronto market. Now, I just want to add something here. In the late 80s, there was a lot of speculation, a lot of flipping, and a lot of oversupply that happened. And as people were kind of that emotional build was going and going and going into the late 1980s, and then all of a sudden we saw a number of things happen. We saw a very deep recession in Canada that hit Ontario particularly hard. We saw huge job layoffs. Then we saw interest rates of 13 to 14%, just crazy. We saw the government start to get involved, and as usual, their policies were not very helpful for the housing market. We had lower immigration than we have now. We had about 250,000 people coming into the market. But what that really all kind of results into is you get into this kind of massive fear loop. So people become very afraid at the time. You also had then where banks were giving people a really hard time, kind of getting mortgages, doing renewals, that kind of thing. And so people became very scared. You have to also keep in mind that there was huge overbuilding and assignments. Now, we had a problem with the condo market in those late 90s. When I bought one of my first condo buildings, I got a very good price on it. What had actually happened with the building was a gentleman was turning it from, kind of the loft conversion into condos, which we've seen a lot of. He could not actually get anybody to buy those condos. The bank told him to rent all of the condos to keep himself above water. Then in the early or kind of later 90s, he was actually able to sell those. He really didn't sell them for any more from those late 80s until the late 90s. So you can see that there was like a huge time in there where prices just kind of came down and kind of sat there. Now, what's happening in 2020s is it's similar and different. Okay, so as you know, in late 2021, we had the highest amount of sales in the GTA we've ever seen, with 120,000 houses being sold. We saw also the highest peak of pricing that we have ever seen. That was just driven by all kinds of emotional craziness and very bad government policy. The government had reduced the interest rates to almost nothing, allowing people to buy a more expensive home at a very low interest rate. Now, if you got one of those and you're keeping it for the long term, good for you. That's a very good decision. The problem is if you need to sell it, that is a different story because then you are losing money, especially if it is a condo. Then we had the interest rate shock. Increasing interest rates dramatically over 1 year without a lot of concern for whether or not people could actually afford to keep these mortgages going. Anybody in a variable rate, which I myself was in many of my mortgages, you get huge shocks, increases, $3,000 to $20,000 a month in your portfolio, or maybe even more. Then the government decided to remove the foreign buyers. Well, you may or may not know this, but the foreign buyers were really, really holding up that condo market, holding up the assignment sales, holding up any kind of rental sales within the Toronto condo market. Then the government pulled them out. So we take out the demand from foreign students, we take out the demand from foreign buyers, and then we have kind of the beginning of that collapse in the condo market, which then was followed, of course, by people and speculation getting into trouble. And what we're really seeing this year is anybody that, did kind of assignment condo purchases back in the early like 2020, 2021, 2022, and they're closing now, they're actually closing at a way lower rate or way lower price than they would have been closing then. So they're losing hundreds of thousands of dollars. Now we're seeing some job shifting with AI coming in. We're seeing kind of, the white collar jobs starting to get hit a little bit more. We're seeing, an uneasiness around the tariffs, of course, which is really more than anything driving kind of emotional fear. We also have, the biggest amount of mortgage renewals going through right now that we have probably ever seen. And a lot of people are kind of on the edge as to whether they can get their mortgage approved or not. Okay. Are we going into a recession? Possibly. It kind of depends on, the economy's kind of holding up right now, but you could feel it everywhere. Like you could feel the beginning of that kind of, recession kind of ticking around us. We have the government now holding interest rates. They were supposed to be dropping them right now, and they're holding them. So now a lot of people are kind of back on the sidelines a little bit. So we've got a very similar emotional loop now to what we had in the 1990s, kind of driven by some similarities, some differences. I mean, we didn't have Trump kind of on the other side of the border throwing on all kinds of tariffs as we do now. But the one thing is, some of these things are kind of surprises and shocks, and then people kind of sit on the sidelines. Now, does it make sense for you or for any of us to kind of sit and wait? If you're a buyer, this creates a massive opportunity for you. You can get a really good deal on a lot of properties right now, and depending on where you want to look in the city. If you happen to look downtown, what you're going to see, we're going to go into the next segment where we go through 2025 May, is we're going to see like huge inventory building up. And what that really means is that there's more stuff available for you to purchase. As soon as there is an oversupply, that means you can take your time, you can think about your offer, you can put in conditions on your offer, and you can even negotiate the price down, which we have been doing. Personally, I'm able to get the prices down on all of the condos I've been selling lately and on all of the leases that I have been doing in the past, say 6 months. We've been able to do some really good negotiating. So, buyers, great opportunity. Sellers, it depends where you are. There are some neighborhoods within Toronto seeing 17 bids, 6 bids, 12 bids. They're doing offer nights. So some areas are really high. So you kind of need to know what's happening in your neighborhood and on your street. If you are a condo seller, well, that's a little bit of a different story. It kind of depends if you want to upsize. So if you want to upsize from your condo, you may want to sell it for a little lower than you were hoping for, but you're also going to get a lower price on your upsizing home. Okay, so next we're going to talk about May 2025. Here we go. May 2025 market stats. Here we go. What you can see is that massive drop in sales volumes. That's not price, so that's the sales volume. So we continue to tick down in the number of homes actually being sold by about 13.3% versus May of last year. However, our new listings continue to increase. We actually have a couple of thousand more listings than last year. You can see here the price has dropped on average for all homes about -4%. Now keep in mind that this chart here is including all of the GTA, so that goes all the way from like Simcoe County all the way to Mississauga and downtown Toronto. And also keep in mind that you have condos in there, so as soon as you have condos, you're going to have the prices going a little lower. All right, so this is sales and average price broken down by 416 versus 905. So what you can see here is your average price for the 905, sorry, for the 416 area is about minus 0.56 for a detached home, and our detached home price is about $1.7 million. Semi-detaches are actually moving quite well right now, and they're about $1.3 million. And you can see there's a big decrease there of -8%, which that actually doesn't happen very often. So that's pretty big. And then you can also see that townhomes have come down about 3%. And then, of course, our condos downtown 416 are -7%. So your average condo price is now at about $709,000. Still, feeling a little high for somebody for their first time buyer. Here's our actual sales activity we talked about. So just breaking down, you can see that big drop in the actual sales volume. And then this breaks down your actually monthly trend. The orange line is so you can see on the orange line here, that is this year. So you can see that we have had, the sales kind of are lower every single year. Yellow is that 2021 line, and then you can see the two gray years in between. So everything dropping, although as you can see on a normal trend basis, you can see that the houses, you can see the actual sales coming up towards the summer, but then as usual, they always drop when you get into the summer. Now, this is a really interesting chart here because what this shows you is your months of inventory. We talked about this a little bit before. This is really important to know because if you are selling or buying, you want to know what your competition is. You want to know how many other people have homes for sale. And what you can see here in this chart is that the central area of Toronto has about 5.6 months of inventory. Now, in 2021, we were down under 30 days of inventory. And now we are back up quite high. The east end seems to be about average, and the west is kind of in the middle. Now, these are the areas with the largest buildup of inventory. You can see that you've got a couple of areas. Now, when we talk about these, C12, W06, this is how we as realtors talk about this, the different communities in the city. And if you look online in realtor.ca, for example, you might actually see that you've got the W01, and then it'll show you where we are. In Roncesvalles, it's W01 to start. So central, right in that C12 area, you've got almost 10 months of inventory. That is crazy. C1, which is your downtown kind of Bay Street corridor, you're at 6 months. And then the west end of the city, we're sitting kind of, these kind of areas that are a little bit kind of west, like Etobicoke and north Etobicoke are going a little higher. And our best performers are actually kind of Roncesvalles and the Junction, with houses moving a little quicker in those areas. If you want to go outside the city and still in the GTA, up in King and Georgina, they're having a lot of inventory, like King at 8.7 months. Now, that's a very expensive area, so that could be why that is. This shows your sales over time. And so what you can see kind of on this chart here is that we had that massive peak. And then, of course, the sales are kind of coming down. And as we know, the prices are kind of getting a little bit lower now. There is a closer look at your average price of May 2025 versus 2024, and this is for all of the GTA. And then you can see in this chart here that this is our average price over time. We're going back to those 90s where we had that really nice gradual incline, our big peak in 2021, and then it stopped after that. So there you have it. There is your May 2025 update. If you would like any more information on this, please feel free to give me a call.